Welcome, Sheetal and the team from WealthDesk, and thank you for organizing this for us. Appreciate you joining us today for this quick brief. WealthDesk is sort of beginning to take off at our end, and to everybody who's attending, it's our pleasure and privilege to announce the introduction of a new firm to the basket of themes called Tamohara Investment Managers. Tamohara today is represented here by Sheetal and by Harini. They would talk about a portfolio called the Vaccinate India portfolio, which they believe is the right theme to sort of be looking at in the post-COVID, or rather not post-COVID, but in an unlock kind of a scenario. The team has been around for more than 5-6 years now and is a well-established Bombay-based investment advisory firms and boasts of some very well-known industry specialists on their board as well as in the investment management committee. So on behalf of all the participants and Prabhudas Lilladher, welcome to the team from Tamohara. And Weber, anything if you would like to add on behalf of WealthDesk, and then possibly over to Sheetal.
Thank you, Sandeep ji. This is Weber from WealthDesk, and I'm heading sales over here. It is my pleasure to invite Mr. Sheetal Malpani today, who will be talking on the subject, as Sandeep ji said, why unlocking as a theme is still nice to invest in. Guys, we saw what happened on Friday, what happened today. The market opened 1% down, but eventually both the days we are turning into green by the end of the day. So there's still enough potential, and we are holding this webinar, I think, on a wonderful time, because if the market is dipping, probably we can get some good entry points to enter in, then and ride the wave, whatever kind of what Mr. Sheetal Malpani would be looking as to for his VIP strategy, Vaccinated India portfolio. So I won't take much of time over here. We are anyways towards the fag end of the market. So over to you, Mr. Malpani, and all for you. So yeah, great, thanks.
Thank you everyone at WealthDesk and clients of Prabhudas Lilladher for joining in this session. The context of this VIP strategy is on the premise that while the market has moved near about 150% from bottom of COVID lows, and a lot of people keep discussing whether there is still opportunity to make money on a risk-adjusted basis, where the risk is pretty much lesser than the kind of return you can make. The context of this presentation is that whether still there is any opportunity in the market where the risk return is in the favor of the clients who are entering at such high levels, and that is where I think we believe Tamohara VIP strategy still offers a decent upside from here on. The basic premise of launching a VIP strategy is that globally what we have seen is that vaccines have been effective, and if vaccines have been effective, there is a high probability that at some point of time in next 15 to 18 months, the world will become a pre-COVID level in more or less sense. We will be 95 to 98% of a pre-COVID level. And if world becomes a pre-COVID level in that sense, I think the consumption pattern, the services pattern, which we used to have pre-COVID before April 2020, I think world will come to that level, and there will be certain kind of industries which will benefit out of it. So what we have seen in last 15 months is that the companies have been impacted on two accounts. One, they have been impacted on account of lockdown. The other, they have been impacted on the lockdown on COVID issues. So companies which have been impacted due to lockdown, they have come out and gained market share, gained margins. But companies which have been impacted both on account of COVID and lockdown have been impacted much more. These industries are basically service-oriented industries, where it includes travel, tourism, entertainment, related to school, or related to SME kind of businesses, where the digital is not big enough to make them survive or thrive in a lockdown kind of a scenario. So with that premise, I think we have launched this strategy, assuming world will become a pre-COVID level at some point of time next 15 to 18 months. What the summary of the presentation is that vaccines has proven has been effective. So there are a lot of doubts, WhatsApp rumors, messages that the efficacy is high, low, or good. But I think the data, the scientific data all across the world has been shown, and which I will prove it further in my presentation with data points, that vaccines have been effective. If you look at the two vaccines in India which we are operating with, one is Covishield and other is Covaxin. So if you have taken one dose, I think 70 to 80% chance that even if COVID occurs to you, the symptoms will be mild. And if you have taken both the vaccination, both the doses, there is chances that 95 to 98%, I think your symptoms, even if you get COVID, will be mild enough. These are the data points which have been released by government near about 2 months back. These data points suggest that the chances of having a severe symptoms reduces by 99% if person has taken both doses of vaccination. If these are the data points which we are working with, and if we are able to vaccinate a threshold of population in next 6 to 9 months, the chances of that our economy and our life our lifestyle will come back to what it used to be between pre-April 2020. So that has been the premise. So the key question is that if vaccines are effective, by when we can have a threshold of population wherein the transmission of virus will get restricted, and the herd immunity will take into place on account of vaccination. So current the biggest problem India is facing right now is the shortage of vaccine. So now the inertia of people of not getting them vaccinated because of certain preconceived notions has been done away with, because what we have seen in second wave, people now want to get them vaccinated. Vis-a-vis prior to March, people thought, "No, COVID has gone, we don't need to get vaccinated." So India right now, on the other hand, is facing a shortage of vaccination. So we need to vaccinate near about 50 60 lakhs people a day, which means that we need to have near about 15 crore vaccination every month. For right now, our capacity of Covishield and Covaxin hovers around near about 9 crores a month at this point of time. So we are running shortage by 6 crores of vaccination. With what government of India is trying to procure from say, Sputnik, and probably there will be 3 to 4 other vaccine manufacturers will get licenses in terms of to provide vaccination all across India. My sense is that, or our sense is that by the end of July or August, I think that problem of shortage of vaccination will go away. What government of India has also provided financial support to these both organizations, Covishield and Covaxin, in terms of to ramp up their production. So by the end of probably August, I think on the safer side, I think we should be anyways hovering around near about 15 crores to 16 crore vaccination capacity, which implies a 50 lakhs vaccination a day. If that threshold, if that pace of vaccination continues, assuming 2 doses of vaccination required to get surety or to get 99% probability of being safe from COVID, from very severe symptoms, I think we should reach a threshold of herd immunity in terms of vaccination by the end of this year. If that happens, I think post Diwali, I think things should start to normalize. The restrictions which have been put down by government on various levels across regions of various level 1, 2, 3 in many parts of India and cities will go away with, and people will be allowed to move freely as they used to do pre-April 2020. In that sense, I think that is a very important data point which we are working with. So these are empirical data points. Now I will try to suggest what has happened in countries where the vaccination has crossed the threshold which I have talked about for India. So look at so the biggest example right now we have is UK, where 60% of UK population. So the country is very small. They have near 6 to 7 crores of population, but they have done away with 60% of population for their first dose. And as soon as they reach the threshold of 60% of population for vaccination, the number of caseload, which was as high as 60,000, came down to as low as 2,500. So there was near 95% reduction in number of cases. The internal travel, retail outlets, theater, outdoor restaurants, swimming pool, bar, they opened up with minor restrictions. They are supposed to go to level 0 in terms of they are supposed to go to pre-COVID levels by July. With recent spurt in cases due to some variant, I think they will go level 0 maybe by end of August. The peak death which UK was reporting in the region of near about 1,800 deaths a day came to as low as 10 deaths in last week or so. So the other example is that Israel is another small country. They have population of near about 2-3 crores. In that sense, they have done away with masking also. So there is no need to require masks in outdoor spaces and indoor spaces. So school will reopen from September, and the peak death of in Israel, which was 100 deaths a day, came down to as low as 2, and right now they are reporting 0 deaths. Many of you who are cricket fans will be looking at how the match between India and New Zealand. You can see there are a lot of crowds which is watching the match, and most of the crowd is having without mask. So that is what vaccination can do. The confidence level of the government will increase manifold once we reach that level of vaccination in that sense. I will give you, and these are 4 data points across 4 countries, which we have across 2 countries which we have collated. The upper quadrant is in terms of number of caseloads, both in UK and Israel. The other is the number of deaths, both in UK and Israel. Look at in last, look at the later part of the graphs have collapsed, which means the number of cases and number of deaths have come down considerably once majority of the adults are getting vaccinated. So these hypotheses, these data points prove that in other parts of the world, if vaccines are effective, there is no reason to believe why vaccine would be effective in India. So these are very promising set of data points which has happened all across in Eastern Europe, Western Europe, and if we take the example of US, in US the peak cases were at 3 lakh to 3.5 lakh cases a day. The caseload at this point of time has gone as low as 11-12,000 cases a day. To the friends, to whatever friends circles we have in US, I think they are at level zero. People are holidaying, they are partying. Even if you go to for any club or disco, there is no need of masking or open spaces. So I think they've gone back to what they were in terms of pre-COVID levels. They have reached near about 45% of vaccination, and they are seeing huge amount of benefit of vaccination in terms of new cases and incremental death rate all across the country. So these are data points across 3 countries which have a different set of climatic conditions, which have different set of immunity levels of those of their population. But I think the one common theme which has emerged, or common data point which has emerged, is that vaccines are working, they are effective, and the number of hospitalization has come down, the number of deaths has come down. If the fear psychosis which COVID created has abated in those part of countries, as and when the population threshold of 50-60% of vaccination is getting crossed. So these are live pictures which you have taken from social media sites of our friends and relatives who have been partying around in these part of world. While I think this China data, a lot of people don't believe in those kind of data points, which we may partly agree with. But if you look at these are photos of China on the 1st of May. The 1st of May is a Labor Day, and it's a Chinese day. The number of people who have traveled has crossed all-time high in terms of pre-COVID level also. So the number of people taking holidays, going to gym, going to water park, going to outdoor entertainment, it has just taken off. The 1st of May, which was this year. So life has gone back to China in pretty much normal. But I think if we don't believe Chinese data point, there are other data points which we'll try to prove the evidences which the hypothesis which we are working with. So in the next slide, the data points will come across other part of the country. Can we have the next slide? So if you look at Starbucks across Europe have done away with masks when the customer come to their coffee shop. New York has ended the restaurant curfew. The sitting arrangement in restaurant in New York are now neck to neck. There is no need of social distancing per se. The rental car firm is facing shortage in US as demand for travel and demand for indoor travel has just gone ballistic. There's one data point which I came across. The demand for luggages in US has increased 400% YOY on last year low base. But these are data points which give a lot of hope and a lot of positivity that once we are able to cross that threshold, I think similar kind of data points will emerge in India also. Of late, I was hearing that in this quarter, the demand for goods and services have come down in US. Goods have come down and the demand of services has gone up, because I think the people are now going out. The things which they were supposed to do because they were restricted not to do, they are now again seeking those services of club, spa, and gym and whatnot in terms of swimming pool and other things. So in that sense, I think the data points all across the world is very heartening and hopeful, and we are lagging the world by 6 to 8 months, and hopefully we'll be there by the end of this year. So next slide, please. Next slide. Yeah. So now based on these theses, what we are working with, based on these theses, we are working with the companies which have been impacted on both the accounts, one on the account of COVID, the other on the account of lockdown. So companies which have been out of business because government has mandated not to open up the maybe an exhibition center or an entertainment center, or commercial real estate have been closed. Passenger vehicles have been impacted. Commercial vehicles have been impacted because movement of trucks and goods and services have been impacted. Leisure travel has been impacted. Apparel retail has been impacted, and financials which finance such kind of businesses have been impacted. These are 5 to 6 large sectors which have been impacted. We believe if things go back to pre-COVID level, these sectors will be first to bounce back. What our thesis is that what we are working is that assuming in next 15 months things become normal, can these businesses which will pick out from these sectors, can they do a similar kind of top line revenue which they did in FY20, say by FY23, next 15 to 18 months? And can they improve margin by 100 or 200 bits from there on? Why we are working with thesis that they will be able to improve margins is there are two reasons for it. These companies have now worked out on a lot of cost measures which are sustainable in nature. The other thing is that these companies will gain market share from their peers who are underinvested, whose balance sheets were leveraged, and they've got out of business. So there will be a market share gain which we have seen from unorganized to organized in other part of industries which have been impacted only by lockdown, not by COVID. Similar kind of, I think, margin expansion which we will see in such kind of sectors and companies which are representing, which are leaders in the profit pool from these sectors. So if they're able to match the FY20 revenue and if they are able to gain margins, I think their profitability should be 15% higher than FY20 level. If their profitability is higher than FY20 level and there is no threat of COVID from there on, I think market will tend to value them on a pre-COVID level. And right now they are trading at near about 30-40% below their pre-COVID level in terms of absolute price point. In terms of valuation, they have been trading a discount to market valuation, and they have been trading discount to their historical valuations also. So in that sense, I think given the data point which we are working with, given the vaccination efficacy, given whatever things which we look around, I think these are 5-6 sectors which can really do well in next about 15 to 18 months from here on as the pace of vaccination picks up. We have seen of late that in other sectors, the market share gain from unorganized players has been extremely high, and large companies have benefited, leaders have been benefited. So I'll just give you an example. In an entertainment industry, it is very difficult for a single screen theater to survive for 15 to 18 months without any business, and take cost. So I think single screen theaters, some of the single screen theaters may close down or may not be able to survive. They don't have balance sheet capacity to survive in that sense. So they will get so a large multiplex chains may get benefit. There's a pent up demand of going out for movies. There's a bunching of movies. A lot of movies are into post production. They are looking for right dates to find audiences where audiences can come and without fear and can enjoy the movies which they were enjoying on a pre-COVID basis. So I think the demand will be there, and there will be a bunch of demand, revenge demand will be there, and these companies will benefit out of it. Similar in the case of leisure travel, I think we have seen. I will just give you one data point. A few days back, we were talking to a hotelier in Dubai. He was saying that their hotel bookings have been packed to capacity. They're operating at 90% capacity in terms of bookings. The rates they are charging is 15% higher than what they were charging at pre-COVID level, and then the employee strength has been reduced by 10%. So they are saying that we are having the best of times in terms of margins, in terms of profitability. Only caveat was that if third wave or fourth wave comes for a brief period of time, I think there won't be sustainability of such kind of occupancies. But I think on a holistic basis, if you look at history of pandemics for last 100 years, the worst pandemic which we read about is the Spanish flu, which lasted for better part of 18 to 20 months. And if we go by that account, I think we are already into 18 months of this pandemic, assuming this pandemic came in China in November of 2019 in that sense. So we are in better part of 18 to 20 months. And at that point of time, 100 years back, we never had vaccination and scientific capability to handle the viruses the way we are handling it at this point of time today. So in that sense, I think we are probably in the later part or fag end of ending this pandemic by vaccinating most of the majority of the adults in probably next 6 to 9 months. If that happens, I think commercial real estate, exhibition sector will do really well. You look at corporate travel might come back big time. A lot of people say a lot of people will continue to work from home. But look at people have not meet each other in terms of teams have not meet each other for last 15 to 20 months. A lot of new hirings have taken place. They don't know who. They are not able to gel around with their people. So we have talked to a lot of people in industry. They said that I think there's a need for meeting up, and this demand will go maybe a 2x or 3x at least for the near term. When we talk about near term, the next 2 to 3 years, demand will be extremely high. Apparel later has been badly hit because people are not going out to offices. There are no marriages, so demand for formal and casual wear has completely gone down. But as and when the economy opens up, we tend to enjoy such kind of stuff. We tend to indulge in a lot of personal attributes. So in that sense, these industries tend to benefit. The examples all across the world shows that these industries are benefited when things normalizes. So there is no reason why India should be different once we are done away with vaccinations. So the next slide, I will tell you the objective of this strategy is that can we make tactical allocation for next 15 to 18 months where the risk reward is in our favor. We'll buy near about 12 to 16 stocks in the portfolio, minimum 5% weight to maximum 15% weight at cost. Mostly consumer-oriented sectors, which will be favored by opening up trade. It is a market cap agnostic. Deployment period will be from 0 to 1 month, depending upon when we get our money. The window of opportunity for such kind of portfolio is that I think we need allocation next 15 to maybe 25 days, because as the pace of vaccination picks up, I think people will start much more believing such kind of theories which I have put across. So the time window for allocation in this strategy is probably the best time is from today to next 15 to 25 days. We can get allocation in that sense to reap the maximum benefit out of it. So these are broader thesis behind why VIP strategy at this point of time, why it offers a reasonable upside despite the stocks have moved up by 15 to 18% in last 25 to 30 days. They still offer reasonable amount of safety, and only caveat is that vaccination needs to work, and it needs to work, and India needs to get vaccinated by December of 2020. This is the performance of portfolio which we have launched the last near about 45 days. Last near 40 days for this portfolio has been extremely good. The outperformance has been there, but it is too short period of time. I still believe there is a lot of upside and likes to the open up trade. That this trade is under-owned at this point of time. Not many people have participated in such kind of trade, and if the confidence builds up, the price movement suggests there will be a lot of money flocking in such kind of sectors. And if we are early in buying into this opportunity, we'll get benefit out of it, both in terms of price performance and in terms of the wealth creation. So my submission is that this is not a hope trade. This is a trade which is based on data points, empirical evidences, which we have seen all across the world. And the companies which we are buying into are leaders of their sectors. They have a capacity to raise capital. Even if COVID we get a third wave or fourth wave, they will be able to survive. And there's a large, once things become normalized, these companies will have an ability to gain a lot of market share. And thus the profit multiplication can be much more than pre-COVID levels. And all the companies which we are buying into the sectors are under-penetrated. I'll just give an example. China has 70,000 multiplex screen, and India has 5,000 multiplex screen. So we are 1/15th size of China with near about 94% of their population. And India produces largest amount of movies. We produces near about 50 movies a week, 5 Hindi movies and many other regional and other languages movies. And we love cricket and movies, we all know. So I think there are a lot of opportunities, and for God's sake, India will continue to grow. India won't end at pre-COVID level, going to pre-COVID level. Today, आज अपन को ऐसा लगता है कि even if we go to pre-COVID levels of GDP, we have done away with. But India has to grow. India will keep growing, and these companies, come what may, I think will continue to ride tough times and gain market share and create wealth for shareholders. So this is a tactical allocation at this point of time, but these companies which are buying into are structural in nature also. Even if COVID gets delayed by even COVID's impacts us more by 3 to 6 months, I think the chances of losing large amount of money or maybe opportunity won't be as high. So in that sense, the risk reward is in our favor, and these sectors, the companies which we bought into are reasonable, provide reasonable margin of safety with good upsides and strong balance sheet and cash flows. With this, I end my presentation, and if any participant has any questions, I will be more than happy to respond.
Thank you, Sheetal. It was a great, kind of an example as to how and why the unlocking theme is still there to continue. Just as like yesterday's news, there was that Delhi is starting to open up 50% capacity for bars, malls, and theaters and all. And gradually, we have seen in the last month that Mumbai is also in the
Yeah.
5 levels. Sorry, Maharashtra in 5 levels is starting opening up. So gradually, I believe the opening up, the unlocking theme will continue, and the stocks will continue to gain as they have been doing in the past 1 month. I was just looking at one data point yesterday, and I don't know how many people in the attendees would have noticed this, but right from 12th May, we have never had seen a 1% down day till today, which is 21st of June, which is somewhere around 5 weeks. We have never seen a 1% down day. So the market has potential. Even whatever is happening in the US and the global markets, we are resilient. We do not have any questions as of now, so I would request people to put in their questions in the chat or the Q&A box. I can take it up with Sheetal. And meanwhile, I would request Abhishek to quickly, just demonstrate as to if people want to get into these baskets, how can they do using WealthDesk platform. So Abhishek, if you can just share your screen and take over the demo part. And once the demo is over in the next 4-5 minutes, I will probably till then we will have some more questions for Sheetal.
Thank you, Vaibhav. So I would request you to enable screen sharing. And
yes, it's done. So can you do it now?
yeah, sure. So I would like to demonstrate how you can invest in Tamuhara well baskets with the help of your Prabhudas Lilladher broking credentials. So you have to log on welldesk.plindia.com, and you have to click on the login button, and you have to log in using your PL India trading credentials. So once you click on the login button, you will land on the discovery page where you will see various well baskets from Tamuhara Investment Advisors. So you can click on the Tamuhara India portfolio, Vaccine India portfolio strategy. And you can see the various details of this well baskets. When was the well baskets published? What is the benchmark? What is the absolute return since inception? Risk, minimum investment amount. And you can also read about the strategy in a brief. And you can click on the subscribe button. Once you click on the subscribe button, if you have not already taken your risk profiler, you have to take the risk profiling, which involves 13 questions. On the basis of these questions, your risk score will be calculated. And you will also receive a copy of this over your email. So once you complete the risk profiling, the next step is to submit your KYC data. So you just have to enter your date of birth. And once you enter your date of birth, you have to acknowledge it and click on submit button. Once you do that, you will see a pre-filled form which you have to submit. And then the next step is to validate the investment advisory agreement using the OTP. So once you click on the agreement button, you will receive an OTP over your email as well as mobile phone, which you have to validate. So you have to enter the OTP and click on the proceed button. The next step is to enter the investment amount, the investment amount you wish to invest into a particular well basket. So please ignore the investment amount. This is a demo video. The next step is to pay the subscription fee. You can pay the subscription fee using net banking or UPI. So either you can scan the QR code, or you can simply enter your UPI address and pay the fee, or you can use the net banking option. Once you pay the fees, you will see the list of stocks which are present in the well basket. So click here to begin with the order execution. So kindly a disclaimer, these are not the actual stocks which are present in the well basket. This is, as I said, a dummy video. So you can see the list of stocks that are present in the well basket, and you have to click on continue to place order. Once you click here, you will be redirected to the trading terminal where you can actually push this orders. So click on the submit button. And once the order are successfully placed, you will be redirected to the My Portfolio page. Now, once you're on the My Portfolio page, you could see the consolidated performance of your well basket. And you can also see a list of various well baskets you have invested in. If you select any particular well basket, you could see the well basket level performance, the fee expiry date. You can see various list of stocks which are present in the well basket. You can see the profit and loss, dividend receipts, your investments. You can also, if you further wish to invest in the particular well basket, you can click on the invest more button. If you wish to exit or do a partial exit, you can simply click on exit button and select various options available. If you want to dig deep into the performance, you can click on user performance button where you'll see various performance metrics for your well baskets. So you could see various performance metrics, you could see your active holdings, you could see your transactions which have been taken place in your particular well basket. And we have a pending actions tab. So in case advisors, they rebalance their portfolio, they book profit in particular scripts, or they generate new advisors, in the pending actions tab, you could see the well basket name and you can see the rebalancing, which you can simply click on approve button to complete the rebalancing. And we have a payment renewal tab where you could see if there are any upcoming fee payment or fee renewal. You can also do a SIP if Tamora Investment Advisors enable SIP for their well baskets. So any questions on the investment journey?
I think if there's any question, I would request people to just type it in the chat box and we'll pick it up. I think, guys, apart from the kind of thematic benefits which Sheetal mentioned for this VIP portfolio through WealthDesk, what I also believe is that the transparency is utmost. I mean, transparency is huge. As soon as you click the OK button, you get to see all the stocks which are coming into your portfolio, which is sometimes not possible in the case of mutual funds where the portfolio is always updated once a month towards the end of the month. And that too, not many people would want to go back and check that what are the holdings and what are even the top 3-5 holdings. In this case, you will at the kind of click of a button, you will know what are the holdings. And then obviously whenever Sheetal or the fund management team says that, okay, now I think this stock has run up and it's time for rebalancing, you will get a notification. You have to just accept the notification and the old stocks will be sold. The new stocks will come in at the market prices. So everything is very, very seamless. So probably if you can want to, and as Sheetal already said, that this is a tactical allocation for your portfolio. So just for that kind of a portfolio allocation, you can probably look into this. And as he said that I think 2 years is what he's looking at. But Sheetal, just to help us, if you see that the valuations are continuously rising and rising, you can call for an early redemption, or is it that people are there going to be holding it for 1.5 to 2 years?
I think there's high chance that this portfolio will go for an early redemption in my sense, because we have been conservative for 2 years. My sense is that I think next year that the trade which the portfolio which the stocks which you're buying into, I think what we have seen in the market is that markets tend to latch on the opportunity as and when they find any mispricing. And right now the confidence is not there because of third wave and fourth wave when people talk about. Because once that subside, I think what we have seen in last maybe 3 weeks in terms of the catch-up trade, you just buy whisker and you get returns in no time. So we have seen it historically, market behaves in that way. The returns come in short period of time. It may come in the fag end of 22 to 24 months, but it can come maybe as early as in the 9 to 10 months. So we don't know about it, but I think there are highly chance that I think we should be closing this portfolio much before 2 years than otherwise. I think the probability today is that the trade which we are executing, I think will play out in less than 15 months rather than in the later part of 2 years.
Great. I think you launched this towards the end of May, and we have already seen 11% returns in 3 weeks. I mean, I do not want attendees to go with this kind of a very short-term returns. That's a very wrong approach. But still, I mean.
Well, I just want to tell all the attendees is that these are dates. See, this is not a hope trade which we are pitching. This is a trade which we have proven. The trade has been played out in other parts of the world because of vaccination. This trade will definitely play out in India once the vaccination happens. Companies which you are buying into, I am not saying they will just go back to pre-COVID levels. The only thing is that I'm just taking the portfolio for 2 years. But I think the companies which are buying, if things become normalized, they can compound from there by 15 to 16% for longer period of time because the penetration is low. These are leaders. They know to catch the next wave of opportunity in that sense. I think we have to get out this notion that India will go back to pre-COVID levels and stop growing. India has the potential to grow at 8-9% for probably next 2-3 decades. And therein, these companies, if they are managed by a good leader, executed well, they will compound money and create wealth for shareholders. Only thing is that since why the positioning we have done for this portfolio at this point of time is that there is arbitrage in terms of mispricing because the perceived risk in these companies by the market or by the market participant is extremely high, but actual risk because of the valuation and because we are at the fang end of COVID, these are because of data points which I suggested, is low. On the other hand, but the other part of the market, the actual risk has become higher because I think most of the earnings momentum have been catched up by and perceived risk is low. So in that sense, I think the stocks which you bought into are trading discount to their fair values, assuming in the normalized world, if that happens, that normalization will become that the discount will become to normal or may go to a premium because we have seen market the shifts from a extreme pessimism to extreme optimism, and that is where I think we are trying to benefit out of that mispricing which market has done, assuming a very bleak scenario for such kind of companies. While science and other part of countries do give hope that we are in for good times, and we have seen I think World War last for 2-3 years, other pandemics last for 2 years. I think bad news come, but I think bad news and good prices come at the same time. Good news and bad prices for investors come at the same time. So these are bad news for such sectors, and so these are good prices to buy. Probably in next after 1 year, I think the good news will come that they are doing good business. People are flocking to movie theaters or in airlines and taking holidays. But I think the stock prices should be far higher than what they are right now. So it is for investors to decide they want to buy on good news or they want to buy in bad news.
Sure, and as it said, pessimist will sound intelligent, but optimist always make money, right?
Yeah.
That has to be the case. So I'll quickly go through all the questions which have been put up by people over here, and then probably add a couple of questions from my side towards the end if we have time. So Sukhdev Santani is asking, although you have answered this somewhere in the speech, what about the third wave, which is bound to come in 6 to 8 weeks, and how will it impact the market? Plus, vaccinations are also in full swing. So if you want to add something to whatever you have already told,
well, what is risk? Anything which you don't know is a risk. See, nobody thought of second wave, it came. Now whole world is thinking that third wave will come. Profit will come, but it won't impact. Historically, we have seen the third wave is 30-40% of the second wave and half of first wave. So if that pays out as it has played on in other pandemics, I think we should be done away with. Government is far more, I think, proactive at this point of time. So it will impact, but I think the duration of the third wave will be far shorter. And I think that is the last phase. So historically, we have seen. I think by that point of time, India should vaccinate near about 50 crore people. Right now, we are at 30 odd crore people in terms of vaccination. So by next 3 to 4 months, we should cross that level where I think the transmission of virus should be reduced, and so we should be okay even if third wave comes.
And I think risk is far more when market is not ready for some kind of market find something which is it was not ready. So first wave never knew that something is going to happen. Second wave also people were relaxed, as you said.
Yeah, well, when we talk to companies which we bought into or which are in open up trade, these companies are not looking कि हमारी capacity हम बढ़ाएंगे. These companies are looking to expand capacity. They are looking for newer business opportunities. So they also believe that at some point of time there is light at the end of the tunnel. Otherwise, if they see a bleak future, they will say, okay, boss, I don't want to expand. I just want to cut my business, fire all employees, and take money home. These companies are investing. They are talking to mall owners. They are setting up new shops.
Apex is on like all-time high or something.
Who would have thought companies like say Domino's would be able to charge 30 rupees for a pizza. Companies like Zomato would be able to charge. So good companies will able to come out of crisis far stronger. As we have seen, good people behave with us in bad times in far better way than we have thought of. Such is the way good companies. They will climb the wall of worries. They will find newer ways of doing business, much more effective ways of doing business, and much more margin accretive for their shareholders, and much more remunerative for the people who enjoy their services. So my sense is that I think with that process, I think good companies should be bought in such times to create wealth. And such is a time for sectors which are in services which have been impacted by COVID and lockdown both.
Right, right. A couple of people are asking about the SIP amount. So I'm not sure whether you have decided that you will take money through SIPs or
I
it's
think
only going to be lump sum.
this portfolio is a lump sum. I always have suggested. I think this is a limited window opportunity.
Yeah.
SIP is more suitable for products which are structural in nature. This portfolio is structural in nature. But when we are trying to identify a valuation arbitrage, a business valuation arbitrage, that arbitrage may not remain longer or may not be meaningful uh, once the vaccination happens. So I won't suggest SIP in such kind of portfolio. Neither we have any option for SIP in such kind of portfolios.
All right, all right. What is the expected turnover of the portfolio?
Expected turnover of the portfolio is that in next I wish I could redeem all the portfolio in next 12 months and give money back to the investors. The turnover should be 1 time or 1.2 times. If we find any opportunity which is better, we can replace.
Right.
But in that sense, I think we have already identified stocks. These stocks are trading at 30-40% below their mean valuations. So I think turnover should be once the valuation comes, I will be happy to return money to shareholders so they can allocate in more structural and whatever opportunities market present at that point of time.
Okay, Chirag is asking, and I know it's a difficult one to answer. What return expectations for these trades? I don't know whether you would want to put a number or a range over there.
There's no return expected. I cannot at this point of time pinpoint, but I think I just give you a ballpark figure to work with. Just look at the pre-COVID level prices of those such companies in the sectors which I've presented, and just go to the pre-COVID prices and look at their current prices and do the difference and divide by them by 2 years, so you can get your return expectation on compounded basis. I've told, I think most of the companies which are buying are trading at 30-40% below their pre-COVID levels, and I am assuming in FY23 they should surpass their pre-COVID profits. So in that sense, I think the
you get a hint. What are the expectations?
Yeah.
Okay, so right, I do not have any more questions. But would you want to give an idea about how frequently will this portfolio be rebalanced? I mean, if before redeeming it completely, there might be some stocks going out or going in.
Maybe 1 or 2 times. What happens, Vaibhav, is that sometimes stocks move so abruptly in no time because the confidence of market comes because of 1 or 2 news or because of unlocking kind of a guidance. So we don't want to buy anything in high proportion if it has run up too fast too soon. So in that sense, we might come for rebalancing 1 or 2 times next maybe 9 to 10 months. That is a max kind of rebalancing we are looking at. But that rebalancing is just to make sure that the risk adjusted return from the clients who have come in the later part of the portfolio should be as good as for the clients which have come in the early part of the portfolio. That will be a good kind of a rebalancing, not where we have gone wrong or we are trying to rectify where we have gone wrong in that sense.
Got it. That helps. I think we are done with the questions from the audience. Guys, if you have still got any questions, happy to take in next 2-3 minutes. I just had one question from my side, Sheetal. So whatever has happened in the last 1 year, 15 months has actually also led to some changes in the habits of people. For example, if you say shopping, online versus offline shopping, and this was one of the things mentioned in your slide as well as the risk. So whatever was mentioned in that column of risk, I think most of them were very true risk, And what do you suggest? I mean, if those risks actually come into play, so people might be not willing to go back to the malls or going back to the theaters. I know this is behavioral. You can only put in some kind of expectation. Then how is the mitigation happening over there?
Well, I'll just give you an example. There was a data point this last Monday. Chandigarh Shimla highway was completely jam-packed as soon as unlocking happened. This is the first data point. See, human behavior is very difficult to change in the next 15 to 18 months, in the last 15-18 months. The number of subscribers of Netflix fallen sharply once the US starts to open up. See, you are consuming the way you have been consuming because you have been told to consume in certain way. If you're allowed, internally we did a survey with 500 people. Right. Assuming a good movie comes, how many of people would love to go out and meet friends and go for a movie? 80% of the people say they want to go out. See, this Netflix and OTT is one more medium of consumption. These people these OTTs have replaced Z's and Stars of the world. See, 15 years back, Ekta Kapoor used to say 9 o'clock watch kyunki saas bhi kabhi bahu thi. Now you say in morning or evening while train time or while sleeping, I wait to watch at my own terms. You can't dictate me. So this is what has changed in that sense. I just give you a data point. The highest amount of gross box office collection in Japan, Korea, and China happened this year. So these are data points which I am working with. See, sitting here, we have our own thought process. Yeah, I think people habits may change. I agree, people habits will change. 10% of people won't be as they were pre-COVID. They won't go for movies. They won't go for online shopping. There's 90% of India, and when this 90% will consume more, and they will, in the companies which are listed, they will gain market share from people. I talked about a single screen theater. They may go out of business. A small bag supplier will go out of business, something like this. We have seen. Yeah, I just give an example. In last 12 months, Britannia in biscuits have gained market share. Why? Not because India is eating more biscuits. Because Britannia was able to get its factory up and running way earlier than any local biscuit wala.
Yeah.
It took him 3 months to get his shop running. And by the time Britannia was able to supply it to his consumer, and once the consumer came in fold, it never went back. Asian Paint, would you believe Berger reported a sales growth in FY21? Sometimes I believe India people not paint walls, they didn't paint.
Agree.
They
I was
reported 2%
surprised.
top line growth. Would you believe?
Yeah.
So look at why it happened, because they gain market share from smaller paint walas, जिनकी फैक्ट्री चालू ही नहीं हुई.
Exactly.
So इंडिया में जिन सेक्टर्स की मैं बात कर रहा हूँ, 30-40% market is owned by unorganized people. If I lose 10% of people, my universe, in terms of they won't be consuming my services or movies, or they won't be traveling, or they will be using only OTT, I take that point. But if I am able to get 10% market share from people, unorganized people, my universe will remain the same. And on the top of it, I will be able to get cost advantage of having lesser number of people, doing less advertising, be cost conscious, because I have no business can get hit by any unforeseen circumstances. My balance sheet will be lean, so I will be able to find newer ways of monetizing. Would you believe PVR is now on Zomato? They are making sure that their popcorn can reach to your home if you are watching a movie with your friends on OTT. So they are business innovations. So earlier, Zomato Pay, there was never a 5-star takeaway option. So you cannot order from a Taj from a Zomato. Right now it is allowed. So see, strong businesses, good businesses will make changes. Yeah, people will evolve, businesses will evolve.
Models will evolve.
Who would have thought we would have come in same way and doing a Zoom seminar on this? So people have evolved. I think we know how to do business, and Indians are smart way of figuring it out to make better business sense, make more money, delight consumers, and the industries which we are a young country. I'm saying even if 20% of people don't have the same habit which they used to have pre-COVID levels, I'm telling you, we are nothing here. We are 5,000 screens, they are 70,000 screens. Just look at China does anything 10x to 15x to what we do. And when we are a young country, we love for services. Indians are anyway social country. So it's very difficult for us to be sitting at home and being idle and using only products and not going on moving out. That is my sense. I think it has been 2 years. Mumbai won't see a Ganpati festival in that besto. So I think once this will come up, it will come up by big vengeance. That is my sense.
No, definitely take your point, and I think we are good with that. With no further questions, I think we can wrap up until unless you have some final words, or Sandeep ji would want to give some final words.
My submission is that, again, I will repeat, this is not at all a hope trade. This is not at all a rotation trade. At least to us, this trade is based on understanding of data point which is emerging from various parts of the world, that things are getting back to normal. Not only the data points, we have talked to people, we have gone to their social media pages and understood what they are doing into, how they are moving into. And we believe human nature is to come back to services, to meet people, to thrive in that sense. And these industries in India are anyways at very low level of penetration, even as Trevor mentioned that some people won't be same as they were pre-COVID level, which I completely agree with. There's still large opportunity to gain market share profitably, and enjoy a wealth creation process. So in that sense, while the portfolio has run up by 10 to 15%, depending upon which date you have come into, but still, I think the opportunity for next 15 to 18 months remains decently in our favor. And given what other part of market, it's just because the prices of those stocks are giving so much comfort because they are strong. It doesn't mean these sectors don't offer opportunity. And you have to believe that at some point the world has to go back to pre-COVID level. If COVID continues to remain a threat, and then whole market may at some point in time react to it in that sense.
People will
so
get
anyways,
used to it.
the hope and the data point suggests we go back to a pre-COVID level, it is, yeah, people will get used to it in that sense. And I think one of the threat of this, that the mortality comes down, the severe infection comes down. COVID may live with us, but the impact and the psyche which it has taken our bandwidth in terms of mind space will go down as we move probably in the next later part of this year or next year. I think globally, look at where schools are open globally. In India, we have closed down. We say future is the child, children are the future of the country. For us, 2 years, no, people are not going to school, they are doing it online. So I think schools should reopen up. We have to find a way to live with this virus and move around and do business and do entertainment and other stuff, and which will happen probably next year, I think. And this is the first set of vaccination which is happening. And the next year the vaccination will be far more effective. There will be various versions which will be improved version, which will improve efficacy. So I think be hopeful, be rational, and be optimistic, be pragmatic. And there's money to be made in the trade, and it is not a hope trade. It is a trade based on data points and understanding, and the risk reward is in our favor. And I wish you all the best. Get vaccinated. It is in the favor of the portfolio and yourself too.
Great, thank you so much. With you on that, guys, if you are interested, then we know how to subscribe to it. I look forward for more subscription. And with that, I think we should be wrapping up. Thank you so much for attending this webinar today.
Thank you,
Thank you, everyone.
everyone.
Thanks,
Thanks,
Sheetal.
Sandeep.
Thanks, Weber.
Thank you.